It is. June is National Homeowners Month, and what a great topic for you to be able to discuss what you know about the market with people. Here's a stat. Did you know that 67.4% of the people in the United States that own homes are what we call equity rich? Yeah. And of the 67%, we've got 38.7% that own their home free and clear. Yeah. 38.7%. That's more than a third of the homeowners. And then there's the 28.7% that have 50% or more equity in their home. And we call these people equity rich. So if you're looking to build your database, I would definitely add a group called Equity Rich. And then I would start going into Remine, which is free on our MLS, and I would find people who are equity rich and maybe start marketing to them. That's my big tip of the day. Yes. And you know that amazingly enough, we are getting more listings this year than last year, which is a good thing. Over the weekend, y'all listed 100 homes Saturday and Sunday. That's fantastic because guess what? We're selling 102 a day. And I always say, churn, churn, churn. We got to keep it grinding. We list, we sell, we list, we sell. That's what keeps this market so alive and so vibrant. And I was doing a class the other day with Jimmy Dague, Be the CEO of Your Life. And we were saying 5 people move here every hour. 5 people move here every hour. So guess what? We need sellers. And there will be buyers. There will be continuing to be buyers throughout the years because why? Supply and demand. There's more people that want to buy homes than there are homes available for them to buy. So that's something you have to keep in mind. Moving on here, we've got an increase in the median price. Now, I haven't changed it yet. I still have 470, but I actually went in and did my own analysis because I couldn't believe it was up at 4 going up to 475 and above. So I took in our zip code. There was 2,158 sales in the zip codes that I use, which are the Valley zip codes. And I did the single family home sales, and sure enough, there was 2,158. And when I got down to that 1,125, sure enough, there it was, right on the edge of going past 470. So some people are saying if you really turn down the numbers, it's about 479, which I don't even want to think about that because affordability is a problem, but you have to address it, and you can't just put it under the rug and not talk about it. So you really have to talk about it. I'm going to share with you what Dave Childers of Keeping Current Matters said about that. And he put it very well. And instead of me trying to repeat it, we're just going to watch that later in the show here today. So guess what? I mean, last year we were selling 102 homes a day in May, and we did the same thing this year, 102 homes a day in May. And we are actually ahead of last year in sales year to date. We're about 739 sales. That's about 110, 115 more a month than we sold last year. 13 more a day than we sold last year. So that's good. I mean, even with the interest rates, I think people are finally getting comfortable with the fact that we have high interest rates, but they still want to buy a home. And a lot of the people that are buying homes, if you look over here, year to date, we have sold in the million plus column, 718 homes. And that's like almost 5 a day. So that's a huge number. And 17%, well, not 17%, that's a big percentage of the market. 718, I can't do the math that quickly, but it's probably about 15% of the market is the $1 million home sales. Amazing. That's amazing to me. Getting back to the median price, there's 1,083 homes, 0 to 470,000, and 24 of those were listed over the weekend. And that accounts for 30% of the market. So, I mean, I didn't, I quit doing the non-home owner because I think it I think that when you go to the title company and you're buying a home, it says, "Is this gonna be owner occupied?" And I think a lot of people aren't sure. So I'm not sure that that number is totally accurate, but it's about 20% of the market, give or take. But I just don't wanna put it in print because I'm not really confident that it's, an accurate number. And but it is around 20%. Last year, it was a little bit more, um, for whatever reason, prices were different last year than, of course, than they are this year. Now, let's talk about pricing for a little bit here. Where's my slide? Did I bring it over? Hopefully. Hang on. Yeah, here it is. Hide this and put this up here. So let's talk about the median price. Now, I did this chart and I did it through May 15th. Um, and I think I did it for the show a week or so ago, and then I didn't have the show. But it was about 465 through the middle of May. And Dave Childers is going to tell you, and there's um, a homeowners, oh dear, home, let's see if I have it written down. Do I have it written down? Home price expectations. Yeah, that's a .com. It's an actual website, and they are predicting that our projected increase average is going to be about 8% per year. So if you buy a home now in median price, by 2028, you will have increased your net worth by 83,000. Well, that's something. I mean, that's something. That's something that you can talk to people about and you can show them. Let's put this other one up here. Move me down here. And here's how it breaks out. Now they did 400,000. If you bought a home for 400,000, okay. And the 83,000 would just go up incrementally based on the price of your home because it's a percentage. So anyway, and you show this to perhaps, somebody that is a renter and doesn't wanna buy yet. There's only the time to buy is now because prices are gonna continue to, go up, and this, home price expectation, uh, source is a valid source, and they have done their homework. Um, and as you can see, this is what it's done. Now I went back and I think I did one for Vegas. Let's see here. Yes, I did one for Vegas. So I went way back to 2014, similar to what they did, and I did the number of sales and then the average sales for the year, and then I did the median price. Now look, in 2014, 199,000. Oh my gosh. 2015, 206. If you bought a home in 2015 and now it's worth 450,000, you are equity rich. So when you put things in perspective, perhaps in your mind a little bit, just figure out how that happens. Well, it happens because of appreciation and principal reduction if they have a loan. So um, you can see how the prices have increased. Now we had one hiccup where the prices went down a little bit. Let's see, which year was that? 2022, we ended up at 460. 2023, then we went down to we went down 4%, but then we came back up 4.5% this year so far. And this year is probably going to average out to that 7% appreciation. So what I'm saying is you can use this chart for sellers who are thinking of selling, for buyers who are thinking waiting is better. Waiting is losing appreciation and losing principal reduction and tax deductions for interest if there is a loan. And we forget about the tax deductions when we're talking to people. I think I don't hear many brokers talk about it. They say, "Oh, houses are going to appreciate," and a lot of them don't even say your principal gets reduced every time either you or your renter, if you're an investment property, your principal gets reduced every time somebody makes a payment, and then you get tax deductions for the interest. So overall, that's 7.9%, 7% is doesn't take into account the tax deductions for interest. And that's why Kawasaki, if you know who he is, Rich Dad Poor Dad, he's the one that says he fights with Dave Ramsey and says, I think there's a video about them or somebody put together he said, she said type thing. And Dave Ramsey says, be debt free. Kawasaki says, no, the way you get rich is to leverage everything with debt. So it's just a comical thing to me, anyway, to see those two experts. And, that's what life's all about. You have an opinion, I have an opinion. I do things my way, you do things your way. My way's right for me, your way's right for you. And the fact that they're fighting about that, I think, is a little amusing. And I don't know if they're doing it for publicity purposes or whatever, but Kawasaki is pretty adamant about how he feels. And so is Dave Ramsey. Debt free, debt free. You got to live debt free. And it depends, on who you are, I think there's not one right or wrong way, is my point. Okay. So here's something that I put together. If I didn't put it in the group, I will put it in the group. And by the way, this show right now is going live on my personal page because Facebook has all these hoops and loops you got to jump through to do a group live. So I didn't do that yet, but I will. But I'm going to move this over. We'll copy this over onto the group and share it. Anyway, because my point about that is because that's where I put a lot of my collateral, like these charts and graphs and things. They're over in the group. Because it's very organized. I can put them under files and you can go get them there without going down through the feed like you would have to do on a personal page. So that's why I do that. Okay, so you've got stuff to talk about here when it comes to the market. And I want to show you, I have some things about artificial intelligence that I want to say, and I think Jason Pantena in this video talks about it a little bit, but if he doesn't, here's what I want to tell you. Go to, let's say, like some of these big brokers. Go to YouTube and just look up, a luxury agent in California or luxury agent in Calgary, Canada, something. See what resonates with people. In other words, what gets the most views. And then with YouTube, they do the transcript. Copy and paste the transcript, put it in your artificial intelligence tool, ChatGPT, and just say, who you are. You always want to give ChatGPT your persona. Tell them who your audience is. Tell them what the object is that you want them to accomplish, and also the style. Like I like to say, I'm a sassy 77-year-old, and put some pizzazz in this, and then they rewrite it for you, and then you can use that and do your video, and hopefully get views like the people that you researched and got what they said, and you reformatted it and reworked it and put your spin on it, and so that you don't infringe on people's copyrights. But you can take people's ideas. They're out there sharing with you, so don't be afraid to do that. But make sure that you give them your persona so that it sounds like you. I've done it, it works, and I think you should try it. So that's my AI tip for the day. I don't know that we can watch the whole 20 minutes of this. I did a clip of an hour video, but let's watch it, because what I want from everybody and what I want you to understand is you've got to be the knowledge broker. You've got to be able to say, and I said this in the class, I said, hey, Jimmy, um, what do you think of the market? And Jimmy says, well, what do you think? Right? Because that's what people will do. They'll say, well, what do you think? Because they think we're the experts. Well, we better have something we're thinking about. And that's why, I post this too. So you can, and I've made it a little bit space, put some more space in it so that perhaps you can say, well, up here is the active listings, and here's the sales year to date. And here's the medium price home sales, and here's the $1 million sales. And I put that little chart, the 83 or the projected increase if of home ownership. So, and it's a great tool for this year, this month especially. Anyway, let's move on here because I want to get this video so y'all can hear it. Um, where did it go? Where did it go? There it is. Okay, let's hide this. I love technology. Oh, don't look at my office. It's a mess. Hey, those are my list of things I have to do. Red is they're hot things to do, and green is, a little bit when I have the time. That's how I prioritize my life. Anyway, I love you all. I love doing this. I miss doing this. Okay, I want to get into Let's see. What I get into.
Uh,
Let me back up a little bit. This is hard to do on this.
One way that you can do this if you're listening is follow
Yeah, come
Jason.
on.
I'm in.
Okay. You'll have to watch all my trying to get the videos
One
there.
way that you can do this if you're listening is follow Jason on Instagram, follow Tom, follow Keeping Current Matters, and just watch what we're getting traction on, because I'll guarantee you that is a topic people want to talk about. You don't have to do more than that. You can go, hey, that's something that really ran well. That's a reel that performed well or got a lot of views or whatever the case
I'll
is.
double down. Go take Keeping Current Matters, a video that performed really well on YouTube. Grab the transcription of that video because YouTube can transcribe it. Put the transcription inside ChatGPT and say, this video
I forgot here. I did put it in there.
script performed really well. I'm in such and such marketplace. Create 3 to 10 viral video ideas on this, localized to Milwaukee or wherever you do business, and come up with ideas for what those videos could look like for you. Those topics could look like for you. I mean, there's a lot of juice in what you just said there, David. I love that.
Yeah, absolutely. I think it's something everybody should be doing as they're accumulating the knowledge that they want to share. So, second thing that I would say you would engage on right now, and Bright MLS, large MLS here on the East Coast, one of the largest in the country, did a study of buyers last year and found out that 72% of buyers in 2023 abandoned their search because of mortgage rates. Now, I would be engaging on this right now. I would be talking to people. I would have a great partner, first of all, as an agent.
Right.
I would have a great partner as a lender that can help you navigate this market. But a couple of things that I believe about where we sit in the mortgage environment. One, it's tremendously volatile, and there are probably 3 things that are affecting mortgage rates right now. Geopolitical events, everything happening out in the world, and uncertainty has a huge impact on mortgage rates. Inflation has an impact on mortgage rates, and that's really the idea of, is it heating back up, or are we maybe gonna get through this thing? That has an impact. And the third is the Fed has an impact on mortgage rates. They don't control mortgage rates, but certainly the posture that they have in the market influences mortgage rates. So what I would be doing is saying, hey, here's what's happening in the mortgage rate environment. Here's what I believe will be happening for the rest of this year, and here's what I think, and I'm giving you my perspective on it.
Yeah.
Forecasters are looking ahead, saying we'll probably see a rate cut this year. We will see a better rate environment, I believe, in the second half of the year than we've seen in the first half of the year. So any buyers that I'm working with, I want to get them ready for that. Are you ready when that moment arrives?
What are some of the reasons for your reasons to believe that?
Reasons that I believe we'll see a better rate environment?
Yeah.
Nobody wants to put anything out that they're going to be challenged on and not act like they or
Right.
sound like they know what they're talking about. So I fully appreciate that. Can I give you, after this podcast, we'll do this real time while we're talking, I'll give you a few slides that you could pop in like the show notes or something that people can grab.
So let's put those. So if you're watching this on YouTube, we'll put a link in the description that will jump you over to those slides from David. Because the reason I ask it is because I can imagine somebody wanting to say that, but wanting to have a little bit more oomph behind how they say that, a little bit more confidence behind how they say that, because that's huge to be able to make that comment. Like, let's get our ducks in a row now.
Totally. I agree. And it's a great call out. So the quick reason for that, 3 forecasters that forecast mortgage rates, Fannie, MBA, and NAR, all say that.
That's all we need.
So you don't have to listen to what I'm saying. Look at
what
I
do listen to what you're
forecasters are saying.
Yeah.
What's that?
Well, and I know that you don't say anything without that level of support behind it. That's why I listen to you. That's why you're my go-to resource for all things what's happening in the marketplace right now.
And listen, everything that we produce, like when I just rattle that off, I'll give you this slide. Everybody can get it in the show notes or in YouTube or wherever it's at. All the source documentation is in there. So if you're like, hey, I believe this, but I have somebody that really wants to go into the actual report where they forecasted this, great, we got it. You can do it.
Let me come on for a second. So what happened, a couple days after they did this podcast was Fannie Mae and Freddie Mac revised what they thought the interest rates were going to do. And it didn't forecast that they were going to go down. It forecasted that they were going to stay the same through the end of this year, beginning of next year. So they redid their forecast that they're talking about because they had forecasted it was going to go, down, I think 6.57 or something like that, the interest rate. But a couple days after they did the podcast, the sources that they're talking about revised what they thought. And they figured, we may be wrong. So they put it back up there around 7%, just so you know. Get back to the
Everybody put in the comments, thanks, David. That's amazing, man. We'll drop a link in the description so you can get all that. All right. Anything else on the buyer front? What are other conversations, if any, that should be being had in a marketing standpoint regarding buyers?
The last one that I think is important is the price conversation. What's happening with prices in this country? There are studies that are done on a pretty regular basis that there's still a higher level of consumers that believe home prices will fall, and the data just doesn't support it. We follow all the forecasters here at Keeping Current Matters. The average of the forecasters for this year is a little over 3% in residential real estate. I think it'll be higher than that, somewhere closer to probably 5% this year. We'll see what the second half brings, but if somebody is holding off on buying because they go, well, the home down the street is worth that, there's no way that's worth it, I'm going to wait till prices fall. Gosh, I got bad news for you. I think we need to be educating people on prices.
Yeah, I think that's true. I'm wondering, have you come across anybody who's had a nice way of doing that? Because there are some folks who, I'm waiting for the market to crash. And in some cases, they're saying that because they believe that it has to happen. Otherwise, they're going to be, affordability is a sensitive subject, is what I'm getting into.
Well, first of all, affordability is a crisis in this country. Yeah. So I think one of the best questions you can ever ask someone, so let's say you and I are having this conversation, you're like, hey, David, home prices, there's no way they can continue like they are. The best question I can ever ask you is, Jason, tell me what you've heard.
Yep. Well, I've seen the headlines, and I saw a video on YouTube the other day from some guy who sounded really smart, and I came to my conclusion. And I'm not trying to dismiss it, but it's like, hey, sure, what comes up goes down, right?
Right. And I think that's legitimate. I think that's what people would respond with, or just conventional wisdom. I look at the run up the last several years, and there's no way that's sustainable.
Mm-hmm.
And that's a perspective on the market that we need to listen to. That sounds like, gosh, I kind of agree with you in that. Now, the data does not support that. Could I share with you a couple of things that I've found as I've studied the market that you might find interesting? Yeah. So one that I always use is the Home Price Expectation Survey, which is a survey of 100 economists, and they say, what's going to happen for the next 5 years? And if you look at the home price expectation survey right now, the next 5 years show very normal 3 to 4% price appreciation in this country. But here's the bigger issue: is why is that? And there's a simple reason that I think we need to educate people on, and it's this fact: there are fewer homes in this country than the number of people that want to buy them.
Supply and demand economics.
That's always going to keep upward pressure on prices.
Yeah,
the average price home bought today over the next 5 years gains $83,000 in equity of purchase today.
All right, so this is good stuff. So for buyers, conversations around inventory, it's rising. Mm-hmm. It's, I think you said 36% up year over year in the US, but it's correct. 36% down compared to where it was in 2019. So we're getting there, but we're not there. Yet it's still a worthy conversation in your marketing to prime folks to think, hey, maybe it's time to get back into on the saddle, so to speak, of purchasing a property. Number two, you talked about mortgage rates. I think that was really good information. You had some great supporting statistics, or not statistics, but forecasts in terms of what we can expect in the back half of the year and conversations you can have based upon that information. And then last, I think, again, this is a sensitive conversation. It's a crisis, like you said, but affordability. And how do you talk to the consumer in your marketing in a way that doesn't create this division between those who can and those who can't, but also helps to give clarity of information in terms of what we can expect. Something I talk about with my coaching clients often is, look, at the end of the day, a buyer wants to make an informed choice. And the
Sure.
only way they can make an informed choice is with the right information. And
Right.
so it's
Right.
incumbent upon the agent, therefore, to give the information that leads to an informed choice. The choice is
Yeah.
not yours to make.
My job then just becomes to educate you, right? So that you can make the best decision for you and your family. Can I say something just quickly about affordability? Because I believe this is critically important. I think if you're listening to this podcast, you're in the business, you have to have a market opinion about affordability.
Yeah.
And I am here to say it's at a crisis level. I can get, and I'll give this to you. You can grab it in the slides that I give on this. Affordability is lower. NAR says at the lowest point in the last 40 years. Okay, right now where we sit. There are three things that affect affordability. And I don't have time to go into all this, but maybe we can come back and do this. We could do a podcast on this.
Yeah.
The three things that affect affordability are wages, mortgage rates, and home prices. So I need to have a relevant market opinion based upon those three things. I'll give you mine real quick. Wages, what's my opinion? People are making more money today than they have in the last several years, and we've got the data and the facts to prove it. Two, what do I believe about mortgage rates? I just told you we're in a downward trending environment. Forecasters are saying we'll see a better rate environment. That bodes well for affordability. And three, prices are improving, but not at unhealthy rates.
Yeah.
So my overall outlook for affordability is, yeah, it's extremely tough right now, but it will improve. And oh, by the way, the ones that are being sold a lie on that right now is Gen Z. People that are coming out of college saying you'll never be able to afford a home. And there's a ton of that kind of content on YouTube. But I think this is a critically important topic that we have to have a relevant market opinion on.
I know you got limited time. Do you have anything else you would say to that in terms of talking points with how a generation is being told they'll never be able to afford effectively the American dream, which is homeownership?
Totally. Yeah, I think it's a travesty. First of all, I mean, I have three kids that are Gen Z. My oldest is 22, my middle son is 20, and I have a high schooler at 17. And she even has asked me this question. Now, is it harder to buy a home today? Sure, it is.
Yeah.
Can you do it? Absolutely. I'll give you a quick resource. A good buddy of mine, Rob Crane, runs a business called Down Payment Resource. Yep. You can go to downpaymentresource.com, and there are, I don't know how many, I think over 2,500 either affordable mortgage or down payment resource opportunities of things that can help people. And I'm not saying that's going to solve every issue, but you have to start to think about, okay, how do we versus I can't? And I think if you're thinking that way, then you can absolutely build a plan if you're Gen Z on how I'm going to buy this home.
And I would say, what a value proposition from an agent standpoint. If you, in the same way we do seller seminars or first-time homebuyer workshops, what if you took it upon yourself to create workshops to educate Gen Z in terms of what can be done to achieve homeownership versus just accepting the belief that it never will be so? All right, now I got to move us on because I know you have limited. I know you have limited time, and I really want to
say one other thing because I'm passionate about this topic. Gen Z is passionate about it, but so are their parents. It's an engagement topic that I think we need to be talking more about.
Man, I think you're right. We're going to have to podcast for longer, but I know I've got you like 5 more minutes. So I've got to get more information out of you. I wish we had longer. All right, let's do quickly, what are the market conversations with database that need to be past clients, sphere of influence, friends and family, your database. What are those conversations? And then we'll spend the majority of our remaining time on sellers. Let's go database first.
I'll hit the database ones real quick, but I think these are important. I'm going to give you a couple of ideas. First one is the net worth of a homeowner. We should be talking about that. The difference between a renter and a homeowner in this country and their net worth is significant. Okay. Yep. And I think these are topics that when we talk about them as keeping current matters, they always get a lot of traction. And here's a fact. The number one way people build wealth in this country is through homeownership. That is by and far true. So that's one area I would engage in. We're here at the end of May this year, recording this podcast. June is National Homeownership Month. I would be engaging my database about how I helped a family accomplish the dream of homeownership, an individual or a story about that, because that's what we need to be talking about right now. We just talked about some of the financial challenges and affordability. Let's talk about some of the significant non-financial things that we can talk about.
I was goofing off with a client earlier today in a coaching session. We were talking about some campaigns, just some corny video ideas. And we had this idea of the Nothing But Net campaign, just like a basketball reference. And I think you could have a lot of fun right now in terms of delivering the good news to all the folks in your database who are past clients who purchased a home, like, hey, nothing but net. Here's how much net you've added to your net worth based upon equity gains since you purchased your home. I mean, you could be corny, not be corny, but there's really, I mean, what an opportunity to deliver ridiculously good news to all your past clients in terms of their equity gains. I love that. All right, talk about sellers. What are the market conversations with sellers we need to be having?
Well, that's a great point. And I think more than anything, in the second half of the year, you and I are working with Tom and about to kick off the listing challenge. So if people haven't seen that, go check that out. But I think in the second half of the year, generating listings, working with sellers is going to come, right here, and it's going to be something we want to focus on. Number one thing every seller has to leverage in this market is the equity in their home. So it's all about the equity conversation. If you followed Keeping Current Matters, I'm looking at the information right here, 38.7% of the homes in this country are owned free and clear. That number right there, you could create a social post or a video and say that, and people are like, what? 38.7% of the homes in this country are owned free and clear. 28.7% of the homes in this country have a mortgage with greater than 50% equity. They're considered equity rich.
Yeah.
So an enormous amount of people, 67.4% of the homes are either paid off or considered equity rich. Now, the one thing that I know is that equity will be put to work. It's just a matter of how and at what time.
Okay.
So that's the number one way I would engage sellers.
Okay. I love that. And you know what? I'm thinking about conversations with Jimmy Mackin and Tom, of course. There is a hunger and desire. I think that was the
number one campaign they ran.
It's if you look at most seller intent lead generation campaigns, in some ways, it's like 6 degrees of Kevin Bacon. They relate to a what's your home worth offer. It always comes back to the equity, because it's a question of what can I do with my equity? Can I reinvest it in a property that meets my needs today, for instance? What can I do with my equity? And then I think having some creative ideas in terms of what other people that you know in your database are doing with their equity. So you can say, like, here's what some folks do. Here's what other folks do. Here's what they do. Here's what you need to be mindful of. Here's some of the mistakes people make with their equity. One mistake I can imagine being made with equity is you just thought all you had to do was put your home on the market for sale, and you left money on the table because you didn't sell it with everything that should have gone into that plan to get it sold for the best possible terms. And so equity is a fake number until you put it to work for yourself in some way, shape, or form.
Yeah.
Love that conversation. What's another conversation that should be had with sellers right now?
I think there are a couple of things that those are in the process of selling. I think the expired listing conversation is going to be bigger this year than it's been in the last several years. We're already seeing more inventory accumulate in the market. Listings are expiring. There's 2 days on the calendar that more listings expire than any other day, June 30th and December 31st, because the listing contracts are written till the middle of the year or the end of the year. And so the expired listing conversation on why your home didn't sell, I think is going to be a conversation that we didn't have to have over the last several years, that will be bigger this year than previous years by far.
Yeah. And I can think about that being a meaningful conversation to pre-frame expectations at a listing appointment. Saying to your seller as you go into the month of June, hey, it may interest you to know or shock you to hear that June 30th is one of the highest days of the year of expired listings. And the reason for it is because people, presumably overshot the marketplace, and here they are, their property isn't sold. And so what are they going to do about it? And how can that be an advantage for you to leverage the opportunity for yourself when it comes to selling your property and positioning it properly for the buyers to get the best benefit out of it? I love that.
I think that's a position that I would take with people that have thought about selling their home. We're going to see more activity come back in the market. Forecasters are saying, you know what, we'll see a better rate environment. I know 72% of buyers gave up their search because of mortgage rates. Is now the right time for you?
Yeah, I like it. And there's a lot of different talking points here. And here's really the goal of this whole thing. You share this knowledge to create engagement so that it produces, well, what about this? Or maybe this for us. And it starts questions circling in the minds of your prospective buyers and sellers so that when you reach out to them to have those conversations, when you engage them, the conversation is so much more rich than if you just just checking in to see how things are going. If you thought about selling lately, that's going to come just way too abrupt versus how is your marketing creating conversations, going ahead of you and working on your behalf to get the minds and the juices flowing for buyers and sellers so that when you reach out to them, those conversations are rich because you've been the informant who's helped every prospective person in your database, in your marketplace, know about what's happening that concerns them and their path of homeownership. David, this has been tremendously grateful. We're always so grateful for you and for keeping current matters in the relationship.
So that was a lot of good information that they shared that you can use. And again, you have to get your voice heard out there because if you don't, somebody else is going to take your place, and you don't want that. We want to keep rolling here. We're in a great place. As you know, I'm very high on Las Vegas, and I just think it's a fantastic place to live and to grow your business. So until next time, I might wait till Friday to do another video. Just because let's let the market mature a little bit. Let's see, go back here. I mean, we have right now, if we're probably, the 102 is probably going to go down. It always does at the first week of the month. So I don't fret about that. But let's just see what happens to the pricing. And I'll be back with you and with more tips and tricks for artificial intelligence and for your social media. I didn't have time to get into that today, but we'll get into it another day. And I love you all and have a great, great week. And remember, it's National Homeowners Month. Use that and use the Market Watch. Get out there.